With a reverse mortgage, won't all my home equity go to the bank?
Your equity won't go to the bank, it will remain yours, but in a potentially more useful form. The whole purpose of a home equity conversion mortgage, HECM, is to convert your home equity into a combination of assets. A guaranteed life interest in the home for you and your spouse, so you can use it for the remainder of your lives without any worry of foreclosure. Plus, an amount of money that you can use however you choose, whether in the form of a lump sum, monthly loan proceeds that are tax-free, or a revolving line of credit. Remember, the line of credit must be drawn out before the last survivor moves out or dies, or it will be lost. This, by the way, is where the reverse mortgage shows how advantageous a loan it could be. When setting up your reverse mortgage, an initial principal limit calculation will be done based on your age and the current home value. For example, let's say you are 62 years old and your home is valued at $600K. The initial principal limit would be approximately 50% of your current home value, or about $300K. That's the amount you can borrow, and you can use it any way you want. You could pay off an existing mortgage or any other high-interest debt. You could put the money into investments, buy a second home close to the kids, or purchase anything else you want with it. If you'd rather have a steady income, you could choose to have your loan proceeds in tax-free monthly distributions instead of a lump sum. On the other hand, if you really don't need the money at the time you open the reverse mortgage, you could choose instead to set it up as a revolving line of credit available for you to use whenever a time comes that you do need it. If a need arises, you draw the amount you want into your checking account. If you would like, you could make payments to reduce the line of credit, just like a credit card or any other line of credit. Why is that important? Think about this. What could you do with a line of credit that is guaranteed to grow at a specific rate annually for the rest of your life? Or if you are not utilizing the full balance, you could just keep it as a piggy bank of credit, waiting for a time when you need it, but guaranteed to keep growing until the last surviving borrower moves permanently out of the home. Do you have any other asset that is guaranteed to grow at a guaranteed rate regardless of market conditions? It gets even better. Let's suppose that at some point down the road, your line of credit has grown to $900K, but your home is only worth $800K. Remember what we said about a reverse mortgage being non-recourse? The lower value of the home has no impact on your use of the full line of credit. You can draw the full $900K and deposit it in your checking account or use it in any way you choose. If it ever happens that the balance of your line of credit is more than the value of your home, there will be no financial hit to you, your heirs, or your estate. Note, this is not legal or financial advice. You should consult an attorney or financial planner for your specific situation. The HECM reverse mortgage is insured by the FHA, and they will be responsible for any portion of the payoff that exceeds the value of the house when the loan is repaid. Let's pause for just a moment. If you spend 20 to 40 years in retirement, isn't it likely that you might live through a prolonged bear market at some point? What if you are forced to sell some of your retirement assets during that bear market? That's called sequence of returns risk, and it can quickly turn upside down all your plans for a comfortable retirement. A HECM line of credit offers you an effective hedge. Barring a collapse of HUD and the US government itself, your line of credit will grow every year until you die. In your entire portfolio of retirement assets, what else do you have that is guaranteed to grow until the day you die? For the financially savvy, here's another way to look at a reverse mortgage with this line of expanding credit. It's like having a put option on the future value of your home. If a bear market ever causes your home to decline in value, you will have already guaranteed its future liquidity at a price based on today's value. Do you know of any other way to buy a put option that doesn't expire until you die on home liquidity? The more home values decline during an economic downturn, the more valuable it would be for you to have a line of credit that is guaranteed to grow.